So, should you buy the worst performing companies from the S&P 500 in 2024? What's going on, team? It's Ricky with TechBud Solutions. I'm going to make this video super short and sweet. I found this article to be super interesting because it covered the S&P 500, the top 5 worst performing stocks, and a potential really solid setup for these 5 stocks. I really hope that you enjoyed this video. If you want to read this article, I'm going to link it down in the comments section. But also, don't forget to drop a thumbs up and subscribe if you feel like I earned it. The thing that I also want to remind you is that let me know down in the comments section which one out of these 5 stocks is your most favorite and which one is your least favorite. I also want to wish you and your loved ones a Merry Christmas. We are running our biggest sale for LPP 2.0. It's the second link in the description down below. So if you're ready to watch me trade live every day, second link in the description down below. Without further let's go ahead and jump right into it. Should you buy this year's worst performing stocks in the S&P 500 in 2024? It goes into this talking about a series of 5 stocks that are down over 49% in 2023. And the really great thing about this is they make it super simple. FMC is one of them. The second one is Moderna. The third one is Enphase, ENPH. The fourth one is Dollar General, and the last one is Pfizer. I already have them in my watch list, so not only did I want to talk to you about the article, but I also wanted to break it down for you on a technical aspect on the Webull trading application. And you guys can let me know in the comment section how I did. The first one, let's go ahead and talk about it, FMC. The thing that I really like about these companies is that they're part of the S&P 500. They're not just companies that have been selling off for a long period of time, but the companies that met the criteria to be added to the S&P 500, which is very valuable. The second thing is they haven't been the best performing stocks in 2023. So the question is, are they a good buy in 2024? I want to remind you, the cheap can always get cheaper, and obviously all of these stocks are not going to end up meeting your criteria. So please make sure that you're selective and that you cherry pick one or if any actually end up meeting your criteria. The first one is FMC. Previously, very bullish. Previous highs, 136, and previous or current lows right around $49 a share. In a perfect world, if this were a perfect world, which it's not, from current price points to previous all-time highs, it would offer 115% ROI. Now, the thing that I want to point out is that on the day chart, you can see that it's still trading below the moving average and barely above the EMA. To me, anytime that you choose to take a trade when it's below the moving average, you're just adding an extra layer of risk. This thing has been selling off for the greater part of 2023. So in my opinion, there's no reason to rush into this. Really allow and give this thing time that it might need for it to actually show signs of a recovery, where I almost get FOMO because it's actually recovering and not just hoping that it begins to recover. And that's really, again, the question that I want to leave you with. Would you rather be someone that's early to a sell-off or late to a rally? Again, it's all about making sure that you time it right when it comes down to this, especially because of how bearish it's been. And because of how bearish it's been, I would say that, again, if I'm not mistaken, let me go ahead and set my alerts here. I'm just going to set my alert for the break above the moving average. And again, just because I set an alert doesn't mean that I have to end up buying this stock. I can also add this stock to my oversold watch list, just making sure that I'm kept up to date when it comes down to this overall stock performance. Let's go ahead and move on to the next one. This is Moderna. Moderna is probably my least favorite out of these 5 stocks. And the reason why is that it did very well during the pandemic, became very overvalued, almost pumped when it comes down to overvalued, hit nearly highs of $500, and now it's trading at lows or sub $100 a share. The reason this is my least favorite is I view it to be the most risky. That sell-off is super aggressive, and it's been actively selling off really since the peak of $500 a share, which is pretty much late 2021. So because of that, I don't have much hope in 2024 that all of a sudden it's going to begin to recover. But again, you never know, right? So I went ahead and I set my alerts for the break above, but also the break below. When looking at this on the day chart, it's still trading below the moving average and barely above the EMA. So for me, there's no reason to jump into this as it's been an active sell-off for the past 2 years. Let's go ahead and move on to Enphase. Enphase, when it comes down to the overall week chart, I love its previous performance from lows of $4 to highs of around $339, currently trading at $129 and previous lows of $72. We can look at this on the day chart, still trading below the moving average. And the thing that I want to point out is that it's getting very close. So if it does begin to break above the moving average, that would be a great sign in the right direction for Enphase. But if it ends up getting rejected by the moving average, just like it has in the past before here and here, then again, there's no reason to jump into it because it could potentially sell off and continue to sell off and end up making new lows. So overall potential for ROI, if this were to be a perfect world, which it's not, from current price points to previous highs would be about 149% ROI. Again, 149%, even if you capture 5, 10, 15% of that. The beautiful thing about this is that they're oversold companies that are part of the S&P 500 that might have a little rally in 2024. This is why I think that they're worth watching. I added it to my watch list and I set my alerts. So let's just go ahead and follow up with this. This is Pfizer, ticker symbol PFE. Overall previous highs of right around $57 a share. Current lows, $27. A very active sell-off trading below the EMA and the moving average on the week chart, but on the day chart trading below EMA and the moving average. To me, this is more of an active sell-off. And again, no real reason on why to jump into this if it's still selling off. The cheap can always get cheaper, and that should be a motto that you stick and engrave in your head in 2024. Stop chasing the bottom of a stock. We call it a falling knife. And focus on taking action when the action is actually happening. That's why I set my alert for the break above 35, as it hasn't really broken above the moving average and made consistent progress above that. So again, that's going to be the criteria that I'm going to be looking for. Other than that, when looking at this from current lows to previous highs, that would be right around 98% ROI. And my all-time favorite out of these 5 stocks has to be Dollar General. Dollar General has been a really strong performing stock in the previous years with previous highs of 257, almost 258, but has recently been selling off. Again, the cheap can always get cheaper. It's still trading below the moving average, but if you look at this, again, it's a very oversold company that based off of its current price points and previous highs would offer nearly a 93% ROI. I'm not a perfect trader, but out of all these stocks, even if I just capture 10, 15% of that, I would be very happy, as again, I want to pay attention to oversold companies that are set up, the right way, just like they're part of the S&P 500, and take action when it makes sense. When looking at this on the day chart, I would like to see some action above the moving average, showing steady progress of higher highs and higher lows, and that's why I set my alert for the break above 160. Other than that, I added it to my watch list. Just because I'm adding it to my watch list and I'm setting my alerts doesn't mean that I have to buy it. And that's the thing that I want to remind you. I want to be very selective in 2024, and I want to take action when it makes sense, not just when I want to. So let's make sure that we keep trading simple in 2024 and that we don't overcomplicate it. So other than that, these are the top 5 stocks with the worst performance in 2023 that are part of the S&P 500. You let me know down in the comment section which one of those 5 stocks is your personal favorite. Other than that, again, I wanted to wish you guys an amazing Merry Christmas, Happy Holiday, Happy New Year. And if you're part of my LPP team, I'll see you tomorrow at Market Open for our live trading session. Remember, we are running our biggest sale for Christmas. And if you want to tune on in, especially if you're tired of missing out, again, my LPP team gets to watch me trade live every single day, live in real time, meaning that you get to see my entries, exits, but most importantly, you get to hear my thought process. You also get access to the A to Z video lesson library that's designed for complete beginners. So if you ever wanted to start learning more about the stock market, getting into trading, getting into investing, this is not something that you want to miss out on, and it's the second link in the description down below. If you have any questions before joining, shoot me a direct message via Discord or via Instagram, which is the first or third link in the description down below. And yes, I am using the Webull trading application, which is the 5th link in the description down below if you want to earn up to 12 free shares when you deposit $5 by using my link. I appreciate your time. Like always, let's make sure that we end the year on a green note. Take care, team.